Hey everyone, welcome to the KE Report Daily Editorial on Thursday, October 9th, chatting with Joel Elconin. Joel is the co-host of the Pre-Market Prep Show. Check out the website in the show notes, also the founder of the Stock Trader Network. Joel, as we've done pretty consistently this year, starting off with the markets, we usually talk about how the markets just have this tendency to drift higher. But I've noticed this month, we're still early on, but October has been a bit of a slower month. Not that the markets are dropping out of bed by any means, but the S&P broadly flat. I have noticed little uptick in volatility, but really the one thing that I find interesting and something for us to talk about is that, look, the government shutdown is continuing, so we're not getting any data. We've talked to some other people about this, so the big question being, what are the catalysts then? Obviously, Trump can come out and say anything he wants, and that can move markets. But from something that we can plan on, Joel, what do we look for as drivers, either up or down for this market?
Oh, good afternoon, gentlemen. Thanks for having me after that little hiatus last week. Uh, you're right. In the absence of this government data, you're not going to be getting any, clearer picture. We missed the jobs report, right? That was supposed to be last Friday. Also, next week, you're supposed to get some inflation data, which will not be coming out unless the shutdown is settled. So what you have now is just a very strong momentum market in the momentum stocks, and they're moving. The data centers are moving, the nuclear trade is moving. And so in the absence of the economic data, you have a headline driven market. And that's exactly what's going on. The algos are going wild. That will change, right? Because we are going to start getting some fundamental data kicked off, however you want to look at it. You did get some Q3 earnings today. Delta with a B. I'll just note that, Delta had a nice pop, but has faded some of those gains. Pepsi, which has just been tarred and feathered since it's got some activist attention. Oh, that's having a good day. But where's the AI in those stocks? Those are not your sexy stocks. So what we'd be looking to next week is we'll start to hear from the banks, the big banks. And, market is at lofty levels. I'd say there's probably lofty expectations for bank earnings.
Well, Joel, let's maybe dig in a little bit more to the look ahead to the earnings season. You got banks next week, and then after that, you probably start getting some of the mega cap tech, and then after that, to round it out, we have the retail. Any expectations that you have or that people that you bring on the show have about how Q3 is going to shake out?
I mean, I think you probably have, a little bit higher bar because of not so much of where the earnings expectations are, but where the market level is. A lot of these stocks have had big runs. So, the bar is high for these runs to continue. For a long time, we've been talking about the possible negative effect of tariffs. That has not seemed to come through yet. And we don't know so much about the inflation, but I say, not so much from a perspective of a high bar as far as expecting earnings. I just think it's a high bar that in order for these rallies to continue, you're going to need some beats. And of course, folks, don't always jump on the headline number because often guidance can trump the actual earnings report.
You're right, Joel. But to that point about guidance, what most companies were talking about or trying to avoid in terms of guidance was tariff related news or expectations. How much are you expecting tariff commentary to creep into guidance?
I mean, at this point, they gave their warnings, and at this point, it really hasn't, come into play. I think, a declining dollar maybe has played somewhat into that and, softened the blow. But I mean, right now, I mean, tariffs, banks, I mean, where's the correlation? I think there's not. I think you got to look at your tariff stocks and, judge them, see where their earnings estimates were, see how they adjusted them. Because if anything, I think they probably lowered the bar for these, for stocks, based on the tariff expectations. And, they've come, I mean, with all what we talked about with, the expectations, what was said for the tariffs, they're pretty much just coming in at, 10%, 15%, which is kind of what the market anticipated originally.
Joel, just as we're talking here, just thinking out loud, there'll be a point where the government does open back up and all of this data will then get daylighted. Is there any potential for upside surprises, downside surprises, something that would upset the apple cart when we get all this data in on inflation and jobs and everything? Could that change the Fed policy? Are you expecting any surprises?
I think I mean just reading that the headlines and the tea leaves, it seems like companies are cutting jobs across the board. You couple that with the government firing people right and left, and also I just think the natural evolution of AI. Yeah, it can add to productivity, but I think it's going to also take away jobs. Now maybe there'll be more sophisticated jobs available to run these AIs, but I think that we're going to have a higher tolerance level for unemployment because I think it's going up for one, what the government's doing, what the companies are doing, and three, AI replacing jobs. So I'm not too sure that a quarter point hike or another quarter point hike is really going to reignite the job market. I think had been in a trend of lower unemployment for a long time. Of course, we had the pandemic that changed the complexion of everything, but now I think you're kind of in a more of a generational pattern of higher unemployment.
So, Joel, if we dive into these markets and still, I guess, the general good health of these markets, what are you seeing underneath the hood? What is leading here? What is working? Or is there anything standing out on the downside that just is not working and it's a almost get out of the way type trade?
Well, your home builders have been an absolute disaster here. And that's in the, against the backdrop of, lower rates on the horizon. So home builders have not been participating in this rally at all. So there's a sector that is, perhaps in need of a turnaround. Your health care is picked up, a little friendliness out of the White House, and boom, you get a big move in the XLV last week. A lot of stocks benefiting it. So it looks like, the value trade is coming back into vogue a little bit. Besides Nvidia here, mega cap tech is not looking great. Microsoft just regained its, excuse me, its 50-day moving average. Apple, well, that's above it. That had a big rally, but that was late to the party. But Amazon struggling at the 50-day. Meta's been trading below the 50 days. So I think maybe, besides Nvidia, that just keeps getting good news, and Oracle, it looks like you're getting a little rotation out of some of the mega cap tech, and that's going into the value stocks.
Joel, on your show, have you had people writing in asking you, or have you and Dennis discussed all these AI companies taking stakes in one another and the government taking stakes in AI and how that's all kind of feeding into a weird AI slash chip slash tech, mega pileup of different strategic stakeholders?
Yeah, we have. And surprises just keep on coming. I mean, you had that Oracle move a couple weeks ago. You have AMD with its move with the open AI. Yeah, government involvement. I mean, if there's one thing you want to take away from investing this year, if the government's behind the stock, you want to be behind it too. You've seen the moves in Intel, and then recently the moves in Pfizer. So that's very surprising, but that's what's going on. Also, I know it's stuff that you've talked about on our broadcast. The rare earths and the mineral stocks, the government getting behind them, and then you have China, tightening on the supply. So there's your momentum. There's your the government involvement. All these companies getting intertwined at the hip. I mean, it's all good when it's going up, but when it comes coming down, will they all come down together equally at the same pace?
Well, Joel, it's so hard to predict what the government's going to be getting into, especially now that they're out there stock picking in certain sectors. But is this sustainable? Do you think that the government stays so supportive through the rest of Trump's term, or a lot of people are saying we need to look to the midterms as potentially a change in just how powerful Trump and his government could be, and that could be maybe a slowdown time for some of these sectors that, yeah, have gotten so hot simply because of government support.
I mean, we really don't have precedents for this except for, GM getting bailed out and, some of the banks. So there's really no historical precedents for this. And as long as the momentum is going to the upside, it's fine. It's just, when it turns, I mean, the government taking stakes in these companies. I mean, if you think about it, I mean, it wouldn't be something that you would be expecting from, Republican administration, but they're doing it right and left. And I think what their goal is just to grow our way out of this inflationary period. Just keep growing, just keep growing, just keep growing. And, that way, if, the growth is higher, then, maybe the expectations, for inflation don't look as bad. But right now, that strong trend, what the government gets involved in something. The U.S. approved several $billion of NVIDIA chips to the United Arab Emirates today. Boom, stock up nearly $4, making a new all-time high. Very difficult to fight what's going on in Washington.
Yeah, it's just really like something we've never seen before. In addition to all the things we've just discussed, we just saw the government come out and take a stake in Trilogy, which is a copper company. And they also approved this road that had been blocked by the Biden administration. And that stock shot up 215% on the day that that happened. It's hard to get in the way of that government money coming in. And yeah, we've seen that in a number of tech companies, a number of mineral companies, healthcare companies. So a wild time. Are there any stocks that you guys are discussing over at your show, over at the Stock Trader Network or over at PreMarket Prep, that are coming up in discussion that people are really interested in, that surprise you that they're getting so much momentum? Any stocks you maybe want to focus in on?
I mean, our chat likes to cover everything, and they like to, follow the movers. So, no, I mean, I think what is pretty interesting, what's going on is, what's going on with Robinhood and, their move into expanding prediction markets. And I don't know if you've taken a look at DraftKings or Penn, but those stocks have been severely punished. DraftKings is getting off the mat today a little bit, but it just kind of feels like Robinhood is taking over the world, and the addition of the prediction markets is going to be another boon to their bottom line. They're wooing younger customers with, I mean, and actually, I had a guest on our show a couple days ago that got into the stock when it was still in single digits. And, his thesis was that he's, in his 30s, he had younger cousins and relatives that they don't have a bank account. They do everything on Robinhood. They have their credit cards there. They do, a lot of different things. So it's reached that kind of status. And then, you add the prediction markets to that, and it's absolutely exploding. Now, I would just throw caution in the wind that, a lot of what's going, you've heard of Kalshi or PreMarket. In fact, PreMarket, which is a prediction market you can only trade Bitcoin in, ICE, which is which bought the New York Stock Exchange. They made a $2 million investment in the PreMarket. And then Kalshi, I mean, they're fending off lawsuits right and left here. I mean, because of derivative trading, but they seem to be getting through that. And then, I could talk a little bit bearish here, but, if they lift that pattern day trading rule, are you guys familiar with that at all?
No, share with that. This just
Uh,
speaks more retail in the market, hey?
Here you go, Corey. Boy, I can't get nothing by you. Pattern day trading rule, unless you have an account over $25,000, you cannot make more than 3 day trades in a 5 day period. But they're going to be, if that pattern day trade rule is either, thrown out or revised, man, you're going to get a whole nother retail army getting in there. Now, that could be good and that could be bad, and you got to be careful. But that's another thing that is on the, it's up, it's on the sidelines. So it could be another big catalyst, at least for the intraday trading and the volatility.
Interesting. Well, Joel, you've given us a fair bit to think about, but look, again, retail does seem to be dominating these markets outside of, I guess, the government also driving individual stocks and individual sectors. It's a weird world that we are in right now, but it still seems to be one that is bullish, I guess we can say, as long as the retail audience and as long as the government still sticks behind these markets. We'll touch base with you next week, see if anything changes. But as of right now, yeah, a little bit of momentum loss, but these markets, hard to bet against them as we've seen too many people call tops. And quite frankly, the market just hasn't topped yet. So, hey, Joel, we'll touch base next week. Again, you want to follow along with Joel? Check out the pre-market prep website, which is linked in the show notes. Joel, as always, thanks for your time. Have a great rest of your week.
Okay, thank you, gentlemen.